Now, today's extended trading idea focuses on NVIDIA. NVIDIA is a company that sits at the very center of the artificial intelligence and digital economy megatrend. Now, NVIDIA is no longer just a chip maker, it is a critical infrastructure provider for AI training, cloud computing, and advanced data centers across the global economy. And the key question for investors as we move deeper into 2026 is this: has NVIDIA already peaked after the explosive AI-driven rally? Or is this still an early stage in a much longer structural growth cycle? Now, to answer that, we're going to step away from some of the headlines and looking at the data, starting with seasonality here. Now, this is a seasonal chart for NVIDIA over the last 15 years. And what you can see is NVIDIA does not move evenly throughout the year. Performance tends to cluster into distinct periods of strength and weakness. So we have a period of strength from the start of the year into sort of 21st, 20th of February, an average return of 12.43%, winning trade 78.57%. And the maximum gain has been a whopping 44%. We then see a comparatively sideways period between sort of February 20th to the start of May. And the average return is only 1.03%. So we're sort of heading into a sort of sideways period for NVIDIA from a seasonal perspective. And also look at some of the falls. They have been outsized. Maximum losses around 20% in 2011, 2012, and over 15% in 2022 and 2025. The average return, as I said, only 1%. So that's definitely a weaker period seasonally. Now, going out of April into the end of October, you can see just into early November, you can see that is another very strong period with an average return of 35% and years where NVIDIA has gained 100%, nearly 150% nearly in 2016, over 100% 2017, 2021, and then greater than 50% in the last 3 years. So that shows you how much excitement there has been and there is around artificial intelligence. So what's important, right, is not just when NVIDIA rises, but how consistent that behavior has been over time. And you can see there has been this broad consistency. So to add some context to this seasonality, let's now compare NVIDIA's seasonality with its corresponding index, like the Nasdaq 100. And you can see here, right, that really NVIDIA is really just an enhancement of what's going on in the broader index. So you can see January to February in the Nasdaq tends to be strong, average return of 4.61%. Then there's this sideways period from February through to the start of May. Again, just a return of 0.59% and some hefty falls in the last sort of 5, 6, 7 years. And then before the general seasonality picks up for a little bit longer here to the end of November with about 11.36% average return. So what this tells us is that NVIDIA is really leading and underpinning the Nasdaq 100 index, right? So NVIDIA is really acting as a driver of the AI cycle, right? Rather than a beneficiary of it. It's enhancing tech stocks, enhancing the Nasdaq 100, and is just kind of an amplification of what's already going on in the Nasdaq. So let's now zoom out one level further, and we're going to look at the S&P 500 information technology sector. We're going to look at it from the ETF perspective and use it as a proxy for the S&P 500 information technology sector. And sector level seasonality is important because capital often rotates at the sector level before it becomes stock specific, right? So if NVIDIA's strongest seasonal pattern aligns with or outperforms the broader technologies, that will give us a sense of how important NVIDIA is for the sector as a whole. And once again, you can see that NVIDIA, is outperforming this very similar pattern. Up at the start of the year, and we saw NVIDIA at the start of the year, it's got an average return of 12.25%. The sector Pacific is 4.71. You can see in the middle of the year, well, not the middle of the year, sort of, this weaker period that we've identified also turns up in the technology sector from sort of Feb 20th through to the start of May. Again, average return of 0.64%. We saw similar moves here in NVIDIA. In fact, very similar in terms of that. So that sort of sector specific period that's also mirrored in the Nasdaq 100 does help us seasonality, like from now heading into spring or heading into end of April, May is a flat period for the technology select sector, right? So it is a weak period, and that is reflected both in NVIDIA, the Nasdaq 100, and the technology select sector ETF. And then if you look at this strong, you can see it goes slightly longer, this strong seasonal pattern, 12.96% for the sector. Compare that to NVIDIA, and you can see, again, 35%. So NVIDIA is really leading the AI drive. Okay, it's really NVIDIA is front and center of that picture. Now, from a fundamental and macro perspective, NVIDIA does remain deeply embedded in several structured trends, right? On the positive side, you've got AI-related capital expenditure. That continues to dominate corporate spending. Hyperscalers remain committed to long-term AI infrastructure build-out. All that supports NVIDIA. NVIDIA maintains a technological lead in high-performance computing and AI accelerators. However, there are risks remain, and the market was particularly sensitive to these risks at the end of 2025. So earnings growth is increasingly concentrated in a small number of customers, and you've got some big names who are supporting other big names, but it's a very sort of small pool. So once that investment goes, it could large chunks of investment could retreat very quickly. So there's risk. Any slowdown in AI capital expenditure or tighter financial conditions could introduce volatility. And that's something that the market is very, very nervous of. The amount of capital expenditure there is into AI investment and the withdrawal of that capital expenditure could see a sharp correction in tech stocks. It's certainly something the market showed how vulnerable it was as we went to the end of 2025. You can see that from an intraday perspective, with anything that hinted at AI capital expenditure reducing would see sudden drops in tech stocks. So at a broader market as well, NVIDIA is also sensitive to interest rate expectations. Fed's expecting to cut interest rates. Remains to be seen what happens in the US jobs market, what happens with US CPI, the rate of those interest rate cuts that are expected this year. Also, it depends on liquidity conditions and overall risk appetite within global equities. To start the year, we've seen a US President Trump, and there's been concerns with what's been going on with Venezuela and the president being kidnapped by the US. That introduced geopolitical risk. And we've also having a number of protests in Iran, which is potentially destabilizing the region. At the time of making this report, it's unknown what the US's response is going to be, but that could be further geopolitical risk. So that means, with the long-term AI narrative remains intact, right? But timing and positioning do matter more than ever. So looking at NVIDIA technically, you can see you've got key weekly support on a rising window here at 120. Got key weekly support at this 150 region. One area of sort of technical interest that's also just standing out to me is a potential head and shoulders pattern that's forming. Now it may not go on to develop, but we'll see. You can see here you've got a left shoulder, you've got a head, you've got a right shoulder, and in technical tactics, you typically look for a target at the height of the head and shoulders pattern. So that's the height of the shoulders pattern, head of the shoulders pattern. So should we get a break, then technically you'd expect to run down towards that rising window at 120. Now there would need to be a catalyst for that, so a risk-off catalyst. But certainly this support level here, the 100 exponential moving average and the 200 exponential moving average, looks very attractive for long-term buyers, which could be supporting that AI narrative. And when you look at some of the seasonality from, if you just took it from the end of January through to the end of November, there's been an average return of 44.51%. So buying any dips doesn't look that unreasonable, but look at some of the max losses, 38.78%. So there's some pretty chunky losses on that journey as well. So you have to be aware and mindful of the risk. So is NVIDIA still the best way to express the AI infrastructure theme at this stage of the cycle? Or have markets already pricing in much of that future growth? Does seasonality offer a decent area to potentially buy in on any deeper dips? Could we look for some good technicals on the weekly or the monthly chart? Could we find buyers coming in at the 100, 200 exponential moving average? Now, while nobody can predict the future, using extensive database, particularly seasonality, helps investors make more informed decisions in increasingly complex capital markets.